Talkin Money.
Yeah, I get it, you're an outcast. Always under attack, always coming in last. Bringing up the past, no one owes you anything. I think you need a shotgun blast, a kick in the ass. So paranoid, watch your back.
Let's get back to action with Talkin Money and your host, Jeff Tarbell.
All right. How you doing? Well, still a few of you out there that remember the old encyclopedia salesman, I guess. So Encyclopedia Britannica selling off the last of its printed editions.
We were talking about, it's kind of like Kodak. There's a technology that's there and made lots of money for years, but can you imagine spending $10,000 for a leather-bound
Britannica
Encyclopedia
Britannica? We didn't have an encyclopedia set at our house because we were Poe. But
in 1996, Jeff, there were 1,000 of these salesmen still in business, going around their house. The whole idea was to go door to door, spend an hour. The whole spiel was an hour and a half.
Jeez.
To walk somebody through an hour and a half to try to buy these. So.
And there is no way right now you'd let anybody in your house to talk for an hour and a half.
Well, and that was the issue.
Anything
back in the 90s, right?
Yeah. So Encyclopedia Britannica. A couple notes here for you. I know there's a lot of people in the mortgage business that listen to this show because they tell me that. I am very proud to be the moderator of the Mortgage Insight Conference, which is coming up Thursday, April 26th at the Arden Hills Resort Club and Spa. And this is really an event that is for loan originators. So it is not for the general public, and it's not for really who's just out there doing loans. So they will know some of these names. Rob Chrisman is a guy that writes a blog and writes a lot about the mortgage business. He's just phenomenal. Rob's going to be in town. Sue Woodard from the Mortgage Market Guide, Phil Rosori, who's from MC Trading, and then a buddy of mine, Dave Batney from Fannie Mae, or just left Fannie Mae, will be here. So if you're a mortgage originator and you're trying to figure out where our industry is going and all the changes and how to do those types of things, that event, again, is Thursday, April 26th, and you can find more information on it online at insightconference.net, not .com, insightconference.net, or you can call 800-955-6180. It includes lunch. It is $39. You get to meet some of those guys as well, and you do not have to meet me, so that won't ruin your lunch. So insightconference.net if you're interested in that. One more little note. April 9th, which is that a week from Monday. Let's see, when was a week from Monday or Tuesday. April 9th is the date for the new FHA fees to go into effect. So if you're out there shopping for a property, you're going to be an FHA home buyer, or you're looking to refinance, you're going to do an FHA loan, you might consider getting your property, if you can, in contract before the 9th and getting your case number pulled, because as of the 9th and thereafter,
Monday.
That's a Monday, so a week from Monday, FHA's fees are going up on their loans. That's the upfront mortgage insurance fee and the monthly mortgage insurance fee, as FHA tries to find a way to raise more money because they're on the hook for more and more loans now, and which means you're going to have more and more losses. That's just the way it goes. So FHA raising those fees a week from Monday. So if you can get out and find something before then that would be to your advantage. I know a lot of you are trying. This is a very illustrative article that any realtor in our area will tell you, is just flat out true. So looking back at last year, the homes purchased by investors rose 65% in 2011, and second homes rose by 17% last year. And they are now accounting for investors are accounting for 27% of all home sales, and that is causing the problem because vacation home buyers and real estate investors are outmaneuvering traditional buyers who are less likely to have the financial means to pay cash. And it is the cash buyers that are killing the first-time buyer offers because they're not necessarily getting the house any lower in price. But if you're John Q. Seller, or if you're a bank and you got a house on the market at $200,000 and Nick walks in and says, I'll give you $195 cash, and I walk in and say, oh, hey, I'll give you $200 with an FHA loan, and I need 30 days to do the loan, you're going to take the cash, and 99% of the time. And that is what is really hurting, particularly our local market, is there is just not much inventory. And I know it sounds unusual because you think that it's a total buyer's market right now. It's not. There's just not enough houses out there. And a lot of these programs that are coming into fruition now, HARP 2 is one of them, and some of the other programs that are being floated around are doing more and more to keep people in their homes, which we all think is good, and it is good. But it's not good if you're a home buyer. And so there's not a lot of stuff out there to buy, particularly in that price point under $250. So it's very, very difficult. So if you are somebody who is looking to buy, particularly maybe your first house, and you're looking in that price range, go back to my earlier comment where I said, hey, be patient because, things are busy and things are time. You have to be extremely patient right now when you're looking for houses, and you're going to have to look and make offers on a fair number of them. And it's frustrating for a first-time buyer. It's frustrating for anybody, but it's especially frustrating for a first-time buyer. They decided, okay, I'm gonna pull the trigger on this. I'm finally going to do it. Got all my stuff together. That's a big decision for somebody. I've got my money together. I've got a gift. I've gone through all the loan process. I'm ready to go. And then, darn it, you just can't. It's kind of like buying furniture. When you go buy furniture, they'd say, okay, that's great. We'll send it to you in 4.5 months. We'll ship it to your house. You're like, that's not fun. You're out shopping for a house, and you just can't. You're getting outbid left and right. And that's going to continue for a while, I think, because, for one, finally you're seeing a period of time when and the cash buyer is an exception. I mean, not everybody's paying cash, but an investment buyer who comes in and puts down 25% down at these prices and these rates can rent the house and at least cover their payment, if not then some, because the rental rates right now are higher than they have been. Rates are lower than they have been. The prices are lower than they have been. So it's a great market for investors, and they're not flippers. They're investors. They're going to buy the houses and hold on to them and
right.
Not live in them, but rent them out and keep them for a few years until the market picks up. So that is one of the problems. I thought this was interesting. 30% of all vacation home buyers said they plan to use the property as their primary residence in the future. So 1/3 of them that are buying a second home are really looking down the road and saying that's going to be my next home.
Right. And, Jeff, it's interesting because you look at trends and what kind of the consequences of the investors buying the homes right now, because some of the research that I've looked at said that even 2/3, over 66% of the people that are employed today that have a job believe that once the economy gets better, they're going to get a new job. They're going to be leaving their employer because they just don't want to lose their job, right? So they're willing to stay on.
Hang on there
a little bit longer. But it will be interesting in maybe 3 to 5 years, maybe even, if you listen to Sac State, they say 7 to 10 years. But when the economy does turn, things get better, people start leaving their jobs. Who's going to own the homes that are going to be coming on the market? They're going to be investors.
Yep.
I mean, to a large extent, they're going to be investors. Maybe people will start selling their houses, trying to upgrade to a larger house at that point. It's just going to be interesting to see what are the consequences of these actions that we're seeing today. What are going to be available? Are they going to be those $200,000 houses, or is all of a sudden that $300,000 to $500,000 market going to start picking up again?
Well, I think the other thing we don't discuss much yet is that we've got the largest segment of our population is getting older, and they're going to be they're looking for these. They're moving more toward a 1,000 square foot house than they are a 4,000 square foot house. Right. So where are these? Remember the old McMansions they used to call them, the McMansions. Where are these houses who's going to live in them? I mean, I'm already looking at our house at a 2-story house and saying, man, after my girls go to school, I don't want to live in a two-story house anymore, hiking up and down these stairs. And
right.
I didn't want to cut the grass.
Well, you're going to see an older generation move into the smaller startup houses and the
we're all going to switch. We're all going to switch. I'll take
straight
your house.
Across, Grandma.
You take my house there. Right. I was thinking of something. We got a minute to take a break there. I did note this article that I've been carrying on for a little bit. This is I find it fascinating, the short-term memory of people who run for political office, any of them. They've been trying to go back and look and see, and they've been grilling Mr. Bernanke, who is the chairman of the Fed. What caused the housing bubble of the 2000s? We can't figure it out. What caused the housing bubble of the 2000s? And Mr. Bernanke quoted here, and they were insinuating that, boy, if the Fed hadn't lowered rates so much, the rates were so low that it just spurred on a incredible demand for housing, and that was the cause of this. Basically, politicians saying, you the other branch of the government, you did it, right? It's all your fault. And there's probably some truth to that. I mean, if you're borrowing money at almost free today, the same price you can get almost any trinket in Cozumel for, almost free today. if you're doing that, that does help. But it's amazing to me how convenient it is that we forgot about one little thing that we did. And we came up with the no-income qualifier loan. We removed the process of qualifying for a loan. So I contend that had rates been 7 or 8% instead of being in the 4s, and you still had the same factor that said basically, here, you want a house? You could have one if you could sign your name, and I'll hold your hand for you and sign it with you, that we've forgotten about that.
Right.
I mean, that's, to me, is where we went away from all underwriting standards entirely. We just said, basically, actually not we, the federal government said, everybody should have a house, and if you don't give them a house, then you're discriminating against them, regardless of what color, sex, or race they are, and therefore we'll slap you over the head, so you better just give them a house. So we gave them houses. And then, shocker, they couldn't pay for them.
Right.
And I don't think it has a dang thing to do with what the rates were.
Right. Well, as soon as you're right. As soon as it changed from how much can you afford, how much can you qualify for, it's, okay, how can we modify the program to get you that payment to get you into the biggest house that you can?
No, yeah. And I mean, the thing you always used to say was, hey, when did life turn from me telling you how much you qualify for you coming in and telling me this is the house I'm getting?
Right.
And which program can you get me into it
right.
for? I mean, you used to say that all the time. It's like, well, what happened here?
Right. Well, the only people buying houses at the end of the market, when the market was at its top, were the people that couldn't afford the houses 2 years before. But now, because of the programs, they could.
Yeah.
So
off the text line, hey, Jeff, I'm going through a short sale in Roseville. We had an offer at full asking price in a week. Thanks for the there you go. Someone from Janae. Yeah. If you are, here's the upside to what is going on. If you can live with the price your house is worth, and if that's a price that you can sell it and either short sell it or you can sell it regularly and get out of it, your house will be gone in a heartbeat, particularly if it's under $300,000. So for those of you that are out there and you're looking at your next house, whatever that house might be, an up or a down move, and you're saying, man, I wish I could get in there, but I can't sell this house here. Realize that you may have to take a little cut on your existing house, but you're buying at a cut also. But the market for a house that is not being sold by a bank right now is so incredibly strong, you will get multiple offers if your house is priced accordingly, and you will be moving. And that's good, because then you can go buy something else from me. I got a 2-story house for all I sell you. So we got to take another quick break. We got a couple phone lines open. If you want to jump in, 339-1140, 1-800-920-1140. Here's my question for you, and we'll take a couple winners. This is just a throw-out question. You can either text me or you can call me. It is being now seriously discussed by the U.S. Treasury and by Fannie Mae and Freddie Mac that we should, as the taxpayers, come in, and for those of you that cannot refinance, we should come in and buy down your mortgage for you to the level that is at least where the level of the value of the home. So if you're upside down, we should forgive your mortgage. That is being now for the first time on a grand scale seriously considered. So if you're one of those people, your answer is probably yes. But for the rest of you who are not doing that, is that a good idea? Love to hear from you. And if we get you on the air today, we'll give you a pair of passes to Sierra Tahoe or some Jim Boy's Tacos. This is 339-1140, 1-800-920-1140. That's Nick Perjanik. I'm Jeff Tarbell. This is Talkin Money. We'll be right back.